Welcome. In this video, where is the direction of the Xcn coin price? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we examine it on the chart, we observe that price movements are limited at a certain level and have not yet clearly exceeded this level. Looking at past price behavior, this level has been tested many times, and each time the price has reversed. This prominent level is called the resistance zone in technical analysis literature. The fact that buyers weaken when the price approaches this level and pullbacks occur when sellers step in shows that this is an important psychological and technical barrier. However, resistances are not walls that a price can't reach forever. On the contrary, when they are broken, they can open the door to a new area with great potential. In the current situation, we see that price is once again approaching this prominent resistance level. Unlike previous contacts, this time we can notice that the buyers are stronger, the lows are forming at higher levels, and the price is approaching this resistance more decisively. This type of structure often resembles an ascending triangle pattern, a development that increases the probability of a bullish breakout in technical analysis. Each time higher lows are made, buyers are becoming more impatient and more willing, while sellers are slowly exhausting themselves at the resistance line. If the price manages to break this resistance level to the upside on volume, it will not only be a technical breakout, but also a strong signal that the sentiment in the market has changed. When resistances are broken, many traders who had previously sold at this level will stop, while new buyers who see the breakout will start to enter the trade. This may cause the price to make a stronger and more decisive upward move. In case the resistance level is breached on the upside, the price will have a great deal of room to move higher. Because when such important levels are broken, there is usually no obstacle above that can stop the price. This allows the price to move upwards much more easily. At the same time, this breakout brings into play an important principle in technical analysis called support-resistance conversion. This means that once this level works as resistance, it becomes support for the price going forward. This makes it easier for the price to regain upward momentum if it pulls back while rising. The fact that the price has touched this level several times before makes it even more important, because the more times a level has been tested, the stronger the signal when the breakout occurs. This is because, even though sellers have stepped in every time the price has touched that level, with each new attempt, those sellers have weakened a bit, and there are fewer people to sell at that level. Therefore, as the price approaches that resistance once again, it may take much less effort to break through it. In the market, breaking through resistance levels is often accompanied by a sharp and voluminous rise in the price, called a breakout. Such movements usually cause the price to move significantly higher in a short period of time. Sudden price increases may occur, especially when buy orders are triggered. Such scenarios offer significant profit opportunities for investors, both technically and psychologically, because the price finally breaks a level that it has not been able to break before and enters a new period. All these positive technical data and the price's approach to resistance raise hopes that an upside breakout may occur in the coming period. If this breakout is voluminous, decisive, and close-spaced, it will reassure investors and encourage new buyers to enter the market. This could lead to both short-term spikes and the start of a more stable uptrend in the medium term. But we can't decide the analysis only by resistance. Let's look at other metrics. Stay tuned. In the world of technical analysis, wave structures, particularly Elliott wave theory, offer a unique method for understanding the psychological tendencies behind price movements. According to this theory, the market moves in a continuous rhythm, advancing in 5 main waves and correcting in 3 waves. In this context, the current price structure appears to be at a critical juncture. It seems that the price has completed the first wave of the upward movement and is now in the process of the second wave correction. Within Elliott waves, the second wave is typically a phase where investors take profits, and some market participants, still skeptical of the initial upward move, initiate selling. This results in a brief pause and a breather in the market. However, this corrective wave is usually short-lived and limited in scope because the upward trend initiated by the first wave has not yet fully played out. As such, the second wave correction is often seen as a potential opportunity zone. Particularly, the 0,618 and 0,786 levels stand out as reversal zones in technical analysis. Currently, the price action is approaching these levels, which may signal a potential reversal. The 0,618 level, also known as the golden ratio, represents a psychologically significant threshold that has historically marked strong reversals. The 0,786 level, while deeper, is still considered a healthy endpoint for a correction. The fact that the price is nearing these levels suggests that the second wave may be nearing completion and that the groundwork is being laid for a new third wave rally. The third wave in Elliott wave theory is known to be the strongest and most voluminous. Therefore, accurately identifying second wave reversals can offer investors a high risk-reward opportunity. If the price stabilizes in this region and starts to show initial signs of upward momentum, it could indicate the beginning of a major bullish move. Another important factor to consider is the behavior of the price during the second wave correction. If the decline occurs without panic and instead manifests as a controlled pullback, this suggests the correction is natural and healthy. Additionally, a drop in trading volume during the correction supports the idea that the move is a temporary retracement rather than a trend reversal. Low volume declines typically indicate profit-taking rather than a strong belief in a sustained downtrend. The second wave generally unfolds in an ABC structure, consisting of 3 subwaves: a decline, a rebound, and a final move down. Once this structure completes, i.e. the C wave is finished, the price often forms a bottom and a strong upward move begins. This marks the beginning of the third wave. The fact that the current structure appears to be developing in a similar ABC formation suggests that the second wave may be nearing its end and that it might soon be time for the third wave to begin. Taking all of these technical details into account, it is clear that the current price zone needs to be monitored closely. This area potentially marks the end of the second wave and the beginning of the third, an inflection point. If the price stabilizes around the 0,618 or 0,786 levels, volume begins to rise, and oscillators start giving positive signals. The beginning of the third wave could be quite powerful. The third wave usually surpasses the first in both length and intensity. Therefore, the reversal of the second wave could be the starting point of significant gains for investors. In conclusion, according to Elliott wave theory, the price is currently undergoing a second wave correction and is situated between the Fibonacci 0,618 and 0,786 levels. Any stabilization in this area followed by upward signals could indicate the start of a new bullish trend. The MACD, or Moving Average Convergence Divergence Indicator, is one of the most commonly used technical analysis tools for understanding market direction and momentum. This indicator provides market participants with the opportunity to anticipate potential trend reversals by analyzing the relative position of 2 different moving averages. The crossover points, in particular, are areas where highly significant signals are generated for investors. In the current chart pattern we are observing, a bullish crossover has occurred between the MACD line and the signal line. This crossover indicates that buying pressure is starting to increase again within the market, while sellers are beginning to lose their influence. Such a crossover typically signals the beginning of a trend reversal and is considered a precursor to a potential upward movement. Especially when this crossover happens in the lower region, i.e. in the negative zone, it suggests that the potential for an upward move may be even stronger. These types of crossovers usually occur at bottom levels and indicate that prices may be starting to shift upward. For this situation to become an even stronger signal, the MACD line needs to cross above the 0 line. The 0 level represents a critical threshold for the MACD. A MACD value above this level indicates that the overall trend is upward and that the market is advancing with positive momentum. Currently, the MACD line is approaching this 0 level, and if an upward breakout occurs, it would serve as a strong indication that prices are likely to gain upward momentum more forcefully. We should wait for it to break above 0. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.